Welcome back to Golden Rule Radio, your weekly recap of the precious metals market and the news that moves that market. And first and foremost, let's pass it over to Eric because we do have one comment from the show a couple weeks ago that we think is worth bringing up. Eric, go right ahead.
Yeah, this comment came from Neffy Silver. He stated, I did buy right at the top because I was afraid it was going to get so expensive that I wasn't going to be able to afford it. And I'm glad I did. I bought a beautiful Australian golden dragon coin that's a bar. It's like artwork to me, absolutely beautiful. I was in the right place at the right time. They gave me a really good deal on it and I saved like $270. Only $25,000 were made.
Well, first and foremost, I want to respond to this just because of the fact that hopefully this show is giving you entry and exit points. There's no reason to jump in with the herd mentality if you're listening to the technical analysis. We get criticized sometimes because there's not a lot of consistency in technical analysis in some people's eyes in a manipulated market. However, it's held pretty darn close to being true and predictable. So that's one thing that you're not alone, Neffy Silver, in that type of a response. And secondly, I would say the fact that they saved you on this particular product, $270, tells me another thing that is what I need to know, and that is they are overcharging for the product to begin with. So there's some funny things going on in our industry, and I'm just going to shoot straight here with you. That is that in a bear market, you're going to see brokerage firms get very, very creative. We were founded in 1972, all right, and have been very consistent. What you want to remain consistent in is industry standard products. If you chase premiums in low mintage products, I promise you, you will overpay and you will not be able to liquidate those as easily as an industry standard product. So not trying to make you feel badly. That's my 2 cents.
Well, and there really are three things here, right? In this whole comment. A, they bought at the top, and you address that by stating you need to be looking for entry and exit points and not just following the most outspoken or at least the most aggressive herd one direction or another. B, they went into a product that we're unfortunately relatively familiar with, and a lot of metals dealers, even very reputable metals dealers, like I would argue we are familiar with commemorative coins and low mintage decorative commemorative coins. For instance, in similar and almost identical product, we had a client call us up trying to get out of about what she thought was $300,000 worth of silver dragons that she paid $49 a coin for. That's $49 for an ounce of silver. Now, there's nothing collectible there. They're not old. They're not rare. They're not highly prized within the rare coin market. They're just purchased from private companies or even mints that put out collectibles at pretty reasonable prices and then tacked on 200, 300, 400, 500% premiums and then sold with a song and a dance. Now, there's a difference between a real collectible coin and false collectability just based on new modern mintage.
Yeah, Miles, and we work with a guy named Drew Kroll here. He's been in this industry for over 50 years. And I remember when I first started, he told me and a client actually, the most important decision you'll make when investing in precious metals is who you invest with. And I think this is a perfect example of that.
Yeah, I do feel badly about that story that you're alluding to. I mean, her $300,000 immediately overnight became worth less than $200,000.
Became worth $90,000.
Well, yeah, I mean, try finding a bid, try finding a buyer for that same coin, and they'll say, well, if you just hold on to it long enough, you'll recover everything that you've put into it from, they've covered the margin for this company to help keep them in business. And so you really need to avoid the pitfalls. We have a whole flyer on the common pitfalls to avoid in precious metals acquisitions. And so I would encourage you to call us and we'll send that to you.
Well, we'll get off this soapbox because we could talk about this for hours with the consistency that we see this in our industry. But Miles, let's jump right into gold. What are we saying today?
Sure. Moving over to the ways to actually make money in the precious metals market by taking advantage of how these ratios play against each other over time. Gold up about $20 today, Wednesday, with an assumption of a rate cut coming up at the end of this month. I think there's also some concern, at least from people like us, with the new appointment of Lagarde over at the European Central Bank, a politician not afraid of spending money with little to no economic understanding whatsoever, getting elected to one of the most important economic positions on earth. So it shows you what Europe is pushing for, and that's zero or even negative interest rates. And that's what we went into this past week on our sister podcast, the McElvaney Weekly Commentary.
Yeah, her official appointment is a technicality at this point, and you're right, nothing new under the sun. It's part of the globalist movement. We've talked a lot this week, too, just about the pressure on the U.S. dollar, but we've talked a lot about the cashless society concerns and that sort of thing, and the digital push. Those are all reasons to own gold, and when you see somebody go to the head of a central bank like this that buys into all of that, I mean, just look at an abstract position from the International Monetary Fund on what their objections are for global currency scenes, and that's all you need to know about Christine Lagarde and why you own gold.
Well, and this is also something that's been building for a number of years. I mean, realistically, we hit bottom in 2015, not 2018 or 2019, even though we've had a break out of that initial transition, or at least that initial rollover period as gold has started to come up. And we're up 38% in the last 3 years. So we're starting to see this base built. These $20 moves up and down on a day-to-day basis are less relevant than people want them to be. Sure, it adds to the 24-hour news cycle, but realistically, we're more interested in the big numbers. So here's the big numbers I'm looking at: 1345 on the low end, 1485 on the high end. Like our previous trading range for the last couple years, we had a pretty big range, and you could see a lot of movement up and down. But that's what I'm most focused on. As far as a new baseline at around the mid-1300 level as our next springboard point up. And I think the first time we see any type of major resistance would be at about 1485. And to some extent, 1422. 1422 is the 50% line between the start of the bear market back in 2012 and the end of the bear market in 2015. So we've been in this second stage up since we broke out of the previous pennant, to where we've been kind of hard stuck around 1422. Now, we have pushed above it a little bit, but we have not actually had a daily close above 1422, at least as of today, Wednesday. So this, in the short term, I think is a relative number, but ultimately that bigger range I mentioned a minute ago is what I really care about. So if I had to make a short-term projection on gold, we had a jump above the breakout of the range in a few days of consolidation. We had another jump up, which ended about 1439, and now we've had another little consolidation in the high 13s, low 14s. That's two of what I think could be three steps. Next step up, 1485, and then I would say a pretty significant drop back down, maybe even retesting that 1345 number, turning the old high into the new low.
We'll move on to silver now. Not much going on with silver. It's still lagging gold. Ratio still above 92. It's inching up from its higher low in May, but we still need the price to be around 1620 to consider it following suit with gold. And as the three of us have discussed on this show before, we're not getting excited till $20. That will be when there's significant movement and we can start to get excited, and we'll see that ratio start to really close quickly between silver and gold. Platinum about the same as silver, still lagging a little bit, but we are getting some higher highs and higher lows, stair-stepping our way up, hopefully to reach that 974 level. And as for palladium's on another tear, testing a new all-time high, and if it closes, this week above 1560, that'll be 6 consecutive weeks in a row that palladium's been on the rise.
Well, we've had a lot of volatility, I think, in the metals markets, mostly because of fundamentals. I love the technical analysis, obviously, but when you see this big of a move in gold and the ratio widening and the white metals not confirming, then quite frankly to me, it tells me that the fundamentals are driving. And one of the fundamentals we already alluded to, the central bank interventions globally. But if the next FOMC meeting is July 30th and 31st, if I'm not mistaken. So we'll know in 2 weeks whether or not we're going to have a little bit clearer picture on these rate cuts. We're already kind of pricing that in. When it actually happens, we may not get as much of a move as you would expect. But if we do, if we do see that reduction, what did Powell say this week? Cross currents are weighing on the economy, so the Fed will act as appropriate. He's under a lot of political pressure, Eric.
Well, and Tori, it's clear that the fundamentals are moving the market. I actually witnessed that this morning. I was, about 6:30 Mountain Time this morning. I was getting my son ready, And I had checked gold when I woke up. It was about $5 down in the Asian market. And then I got one of those Bloomberg notifications across my phone with the exact quote you just read from Powell. And I thought, well, let's check gold. And within a matter of 30 seconds, I watched gold go from down $5 to up over $12, just like that. So fundamentals are clearly moving things.
Yeah, the power of the words, and it can be inflammatory words, right? It can be Iran saying things to Trump. It can be Trump saying things to anybody. It can be Powell saying things to the markets. And so it's going to respond accordingly. And so we're watching that. The S&P, meanwhile, hit 3,000 briefly this morning on Powell's same comments. So they want there to be rate cuts. They want there to be loosening in the credit markets. They want there to be easier money for the banks. And quite frankly, the banks are going to want it too. Pretty soon they're going to have us paying just to keep our money on deposit.
New highs mean new trading ranges. So ultimately we'll have to see where that high ends up, and this is where that crack up boom concept comes in, I think, is what ends up being the high. I mean, have we had the last liars in yet? Are these just the last breaths of a market about to start a new stage, or is this a next step up? I mean, I'll be honest, I thought 2015 was the end of the Dow run, and lo and behold, we get another 7,000 points out of it. And we saw very similar action at that point. We put in a high, we tried to put in a better high, we tried to put in a better high, we kept having drops that were pretty substantial, 10-15% drops. Fed steps in, and lo and behold, we go from 18,000 to 26, 27,000. So you never really know what the end of a panicked market ends up looking like. Same with gold on the other side. 2014, 2015, 2016, same thing. We kept trying to put in lower lows, and it just couldn't. And we had a lot of volatility for those years in gold, up and down $200-$300 in the course of a year or so. This could just be that last breath volatility to where the bears end up taking control of the market for a few years, or it could just be another step along the way. It doesn't shake my interest in the markets that not only do we have gold going up, we also could have the Dow going up. And there's only a couple market options out there, right? You've got the interest rate markets, you've got currency markets, you've got equity markets, you've got commodities. And if 2 or 3 of those markets are all going the same direction, that means the last liar in this case, probably the currency and debt-centered markets, are looking to take a huge kick in the shins.
Yeah, they're not going to all go up in perpetuity, and the currency likely comes under a lot of pressure because the dollar's been climbing a little bit through all this too. And this is a very rare occurrence where we see the equities, the precious metals, and the dollar all ticking up. Wouldn't you agree? Yeah.
Yeah.
And some of that, again, going back to the geopolitical, before we close, I want to point out, one, you've got Great Britain taking this Iranian oil tanker, right? So that adds a lot of pressure geopolitically to an already hotbed issue with the Iranian sanctions, and they breached the nuclear agreement on uranium enrichment this past week officially, and Trump tweeted that sanctions will soon be increased substantially, and we've already seen an uptick in that pressure. So it used to be that everything was on Syria, right? Before that it was Libya, before that it was Egypt, and so we're bouncing around through the region. Doesn't mean we end up in war, but you do see gold respond to these types of tensions, and we'll just have to see how that plays out.
That's going to do it for this week. We're excited to see what the next week brings as far as prices go and where we close. Thanks for listening.
You can find us on Twitter at ICA Gold, Facebook, McElvaney Financial, or our website, McElvaney.com. As always, if you like what you heard, click the subscribe button, ring the bell. Do join us in the comments if you have anything you want to bring up, a piece of insight or a question. And give us a call if you'd like to discuss your personal portfolio with one of us or one of the advisors here at McElvaney ICA. 1-800-525-9556.
Have a great week.